Hello traders. I believe you are doing well and I believe you are having a great time today. I believe you are having a great time today. I will do a short teaching on liquidity. I will do a short teaching on liquidity. We are going to learn how liquidity is being stored above previous days highs and lows and how the market will constantly seek that liquidity in the future times. We'll be able to check and see how the market will continuously seek the liquidity that is resting above previous days highs and lows. That is the teaching that I'll be just looking into, and I just want to brief you on that so that you can know what you're going to talk about. So before I start, I just want to say just a few small insights. So you see, being a trader is like being a hunter. Being a trader is just like being a hunter or a shepherd, just like being a hunter or a shepherd. You know that when a shepherd is taking care of the animals, he's always with the animals, but not all the time. He's always with the animals, but not all the time. Just treat the animals as the market price. Whenever the animals uh, go somewhere, they always leave their footsteps behind, and the shepherd will be able to know where the animals are without even seeing them, because since they leave their footsteps behind, or since they leave their tracks behind, he will be able to trace them using that track. The animals may be going to a nearby water source. The animals may be going to a nearby water source, or the animals may be going back to eat them. So the shepherd will be able to trace, or the hunter will be able to trace those footsteps until he gets to where the animal is. And when he sees the animal and the animal can't see him there, you'll be able to shoot it. You'll be able to shoot it when he's hunting. You'll be able to shoot it and make a killing. After shooting it, he will pack his thing and then begin to go back. The job for the day will be done. Just like being a trader. When you are trading, just know that you are tracking smart money. You are tracking the footprints of the big commercial traders. Smart money. So you have to understand that since you are tracking those footprints which they leave behind, you have to know how to see those specific signatures which they leave behind, the footprints which they leave behind when they move price from one level to another level. So one of the signatures that we are going to look for and that we are going to learn today is liquidity, buy side liquidity and sell side liquidity. We're going to see how smart money takes price from buy side liquidity to sell side liquidity, and from sell side liquidity to buy side liquidity. So that's one of the things that smart money does in the market, and we have to know that since we are tracing and we are trying by all means each and every day to track their footprints in order for us to be in alignment with what they are doing. So today I'll be just doing a short teaching on the liquidity, buy side liquidity and sell side liquidity. Just know that each and every day above the day's high, there is always buy side liquidity or buy stops, and below the day's low there is sell side liquidity. I'll just do a quick annotation of that so that you can be able to see it visibly. Buy stops, and below it we have sell stops. We have sell stops below it. So this is the liquidity that price is constantly seeking. Price is always moving from buy stops to sell stops, and from sell stops to buy stops. So I have annotated each and every day here with this gray shaded area. It's a 4-day. So in this clear white spaces above these black lines, in these white areas, that's where the liquidity is. You cannot see it visibly with your own eyes, but with what you know and what you understand about price and about the market, you know that there is liquidity above this high and below this low here. It is there. That's why price keeps going above these highs and these lows. And I will prove it to you today. You will see that the market is always attracted to these highs and lows of previous days, of the previous day. As you can see here, this was the first day. This was the first day of the year. The market, when it opened on the first day, we had this beautiful day. It was a quite big range day, 165 pips, which formed the high and the low. What rests above that high? Buy stops. What rests below the low? Sell stops. So on this day here, you can see that it was an inside day. It engineered another pool of liquidity. And on this day, this high wasn't taken. What rests above it? Buy stops, buy stops. Now we have this buy side liquidity, this buy side liquidity, and this buy side liquidity. And then finally price triggered the sell side liquidity and the sell side liquidity. But then on this day here, price opened, went all the way down, triggered the sell side liquidity below this low and this low. Raided it, expanded up, and what does it do? The sell side liquidity has been cleared. Price is going to seek buy side liquidity. Where is the buy side liquidity? Above this high, above this high, and above that high, and that high. Price goes all the way up, clears this liquidity pool here. So you will see that when you are bearish, price tends to clear the buy side liquidity first and then run for the sell side liquidity. And then when you are bullish, price clears the sell side liquidity as it is done here. You can see price clears this liquidity here. That's the manipulation clearing the liquidity there. And it runs back all the way up seeking the buy side liquidity, which is resting above these highs here. That's the buy side liquidity there. It's running for that buy side liquidity. And as you can see here, price does the same. Price is bullish, goes up, clears this buy side liquidity here. And you will notice one thing. Whenever price is bullish, when it closes above the previous day's high, it doesn't come most of the time all the way down for the low and then continue going up. It usually uses the upper range of the day to retrace back into it and then continue seeking buy side liquidity. As you can see here, price was bullish on this day. It didn't come all the way to clear this low, but it just used that upper range, it retraced a little bit, and then it continued going up. And as you can see here, on this day, price engineered this buy stops, and then price is bullish. Does it have to come back and clear this low? Not always. Most of the time, it won't clear it. To just retrace back inside the range of the previous day and then continue going up. And then on this day too, just does the same thing. It retraces inside the previous day's range and then it goes up. But as it's going up, you can see that it's leaving behind sell side liquidity. Below these lows, sell side liquidity is being formed while buy side liquidity is being cleared. And as you can see here, on this day here, price trades a little bit up, takes the sell side liquidity there, taps it, and then it trades back inside. Did it take out this low? No, price is still bullish. And then it expands up, takes out the buy side liquidity. And now, as you can see here on these days here, price was going up and down, taking buy side liquidity, taking sell side liquidity, and it kept trading inside the equilibrium of this high and this low. Price was just consolidating all in this 1, 2, 3, 4, almost 4 days consolidating. And then on this day here, you can see price takes out the buy side liquidity here, trades back inside. Does it take the low? No. Why? Price is bullish. Price is going to seek the buy side liquidity here and here. Price goes up, takes it up. And as you can see there, the same situation, price was consolidating up and down. So whenever you see the highs and the lows overlapping up and down, being clearing the lows, and price runs, clears the highs, most of the time you'll be in a consolidation. And you can even see that the days are just stacking on each other. They are just in the same line. They're just in the same line, just playing around, just in the same line there. And if you take this highest high and the lowest low, let me show you. If you take the highest high there, and then if you take the lowest low here, and then you take that, put it there. This is the equilibrium of the range here. So you'll see that whenever price is in premium in the upper range, it sells all the way back to the down range, and then whenever it gets inside, it sells all the way. Whenever it's down, they buy it. It's up, they sell it. Down, buy it. As you can see, whenever it's up, they sell it. Down, they buy it. Up, sell it. Down, they buy it. And then until price went out of the range here. So all these days for 1, 2, 3, 4, 5, 6 days, they were consolidating, they were accumulating until price took out the sell side liquidity below here. Price took out the sell side liquidity, cleared the sell side liquidity just resting below there, and let's say, because it's already hindsight, we assuming that we know that price is bullish and is going to be bullish. When you see this manipulation taking out the sell side liquidity and you know that it's bullish, what do you look for? You begin to look for the buy side liquidity, the liquidity resting above this previous day's highs here. because it's bullish, and price goes all the way up, takes out this liquidity here on this day here, and all this liquidity using the same day here, and on the same day what rest above that high? Buy stops, and below the sell stops. What does price do? It clears, assuming that you already know that price was going to be bearish when it reaches here. So all of this is hindsight, as you can see. So you know that price is going to be bearish, and what happens to price? It cleared this buy side liquidity and it went all the way. Then what is it seeking now? Sell side liquidity. Where is the liquidity resting? Below this low, and this low. Price opens on this day, manipulates to the upside. Does it go above that one? No. Why? Because price is bearish. So whenever price is bearish, it's just going to do a small manipulation, mostly below the upper, in the lower range of the previous day. So most of the time, let's say you have this high and the low, price will use the lower range for it to continue going down. So price just retraces back in this lower range of this previous day, and it just retraced, gave us a sell setup, and then it continued. You can see that it's having this resistance. It's just passing through these lows with ease. Why? Because order flow is bearish, and price is preventing these highs. It's not taking them out because institutional order flow is bearish and price wants to keep going down, and is doing it with ease. As you can see there, then it clears the liquidity. On this day here, the same thing. Opens, manipulates a little bit, sells, taking out this low here. On the same day here, price opens there, manipulates, taking out this low here. And then you can see now, after taking out this low on this day here, price on this day here just accumulated, did nothing, engineered the buy side liquidity and sell side liquidity. So we have this buy stops, and what does price do above this highs? It goes up. As it's going up, it engineers this liquidity here and this one here. Let's assume again that you know that it's going to be bearish. Price takes this buy side liquidity here, as you can see, and where is it going to look for the opposing liquidity? In this white space here. What's right below or inside this white space? We know that there are sell side liquidity, and below this low there are sell side liquidity. Price opens, manipulates up. Why is it not taking out that high? Price is bearish. We don't want to see it go above the highs. We want to see it being protected from going above the high, but to find ease in going down and clearing the sell side liquidity. The highs will only be taken when price is bullish while the lows are being protected. So we'll show you to that. I will show you that as we move on. So whenever price is going down, just know that buy side liquidity is building above the market price while it's taking out sell side liquidity. Whenever it has finished now to do its business on the downside, like here, you can see price has been going down, the highs were being protected. When the business was done here, price manipulates, taking out that last batch of sell side liquidity, and then it begins to seek the buy side liquidity now above these highs, because there are buy stops there. When price was coming down, the buy stops were being engineered above the highs. So price begins to run for these highs now. As you can see there, they cleared them. The same thing keeps happening over and over again. When price was going up here, sell side liquidity was being formed below. So price came for that, takes the sell side liquidity and the sell side liquidity. And as price is doing that, you can see that price was bearish for this 1, 2, 3, 4 days. buy side liquidity is building above the highs while the sell side liquidity is being cleared, and you can see that price is not being allowed to go above the highs. It just tracing a little bit and then it sells, opens, traces a bit, sells. Where's the target? Below the low, below the low. Price opens, target the lows, and as you can see there, it took out that low, price goes up, small range day here, nothing much to be done, and again buy side liquidity keeps building whenever price is bearish. As you can see here, price is targeting this low and this low, does its thing and then it sells nicely. Price is bearish, this low is the target, manipulates and then it comes, sells off, takes it out. Look at how they're protecting the highs, and price is being allowed to trade with ease to the downside. Price takes the low, the next day opens up, target is this low, it takes it out here. Whenever it forms a low like here, goes up, takes it out, and then does the same thing when this day here goes up, takes out this low here. But now buy side liquidity has been building when price was coming down, so we have a lot of buy stocks resting above this previous day's highs. And then on this day here now, price opens, goes up a bit, takes out the sell side liquidity, which is resting below the low there, and immediately price, as you can see, expands to the upside, break structure here, comes back for a retracement. Now price is beginning to seek the buy side liquidity above this high and this high and this high and that high, or this buy side liquidity which is resting. There's a lot of buy side liquidity resting above this highs that has been stored. So price is going to seek that, and you can see that it just traded nicely, taking this buy side liquidity, traded nicely, taking it out. And when you look at this day here, price retraces, takes the low, and then eventually runs up, taking out this buy side liquidity and this buy side liquidity. And same thing again happens. As you can see, it took out that high, took out the buy side liquidity, then it retraces back inside. Does it take the low? No. Price is going to seek what? The buy side liquidity above that high. It retraces back deeper to where the move started. As you can see there, on this day here, small range day, but it was going up. And then on this day here, price took out this buy side liquidity and engineered this triple highs. What rests above those highs? Buy side liquidity. What's rests below this lows? Sell side liquidity. So price engineers this highs and then immediately transfer the sell side liquidity, clears all this liquidity in this one move here, one day move, clears the sell side liquidity, sell side liquidity here, sell side liquidity here, the sell side liquidity. And what happens again, now since we have this buy side liquidity which is resting there now, the sell side liquidity has been taken. What rests below this low? Sell side liquidity. Price trades below it, takes it out, and what happens? Price expands up, is seeking what now? Buy side liquidity. That liquidity is resting there, this liquidity, price takes it out. On this day, we take out that liquidity there, and then price runs aggressively for this liquidity there, takes it out, and then this buy side liquidity, price opens, runs up, clears this liquidity in this relative equal highs, and the same thing again, price opens, runs up, clears this buy side liquidity like this small peak, and then price opens here, clears the buy side liquidity now, But now you can see now price has done its job. When it has finished doing its job, time for a reversal. When price is reversing from here, where do you think it's going? For this sell side liquidity, look at how the liquidity is being stored below the lows here. We have this sell stop, sell stop, sell stop. Do you know that there's a lot of liquidity in these white spaces? So price is going to seek that, and that's why you see this massive crash taking out the sell side liquidity below these base lows here, because there's a lot of sell side liquidity resting there. And when it has been, you can see how they wiped 1, 2, 3, 4, 5 days of rise just in one day. So all these people were smashed on this move here. And when it is done, now price begins to seek buy side liquidity again. Sell side liquidity has been cleared. Where do we find buy side liquidity? Above that high. The sell side liquidity was taken and price expanded nicely. Remember, as they're going up, sell side liquidity is forming already below this low. Price breaks, you can see how it breaks these highs with ease, traces, and then it continues going up. It breaks the highs with ease, traces nicely, continue going up. It breaks the highs with ease, traces nicely, continue going up. Look at how these days are just aligned like staircases. It's like you are taking a walkway. Your step 1, step number 2, step number 3, step number 4. You are just climbing this nicely. As you can see, look at how the lows are being protected. That's a clean bullish order flow, clean bullish trend. Price is being taken to the upside. The tracks are clear. These are signatures that you want to see. You want to see price go above the highs with ease. You want to see that. And as you can see, when price is still going up there, what rests below here? Sell side liquidity. Price takes out the high. Now it's beginning to go down. What is it seeking for? For the sell stop below this stage lows. It takes out the lows there, as you can see. And when order flow changes to bullishness again, you can see now again it begins to seek the highs again. As you can see here, you get the staircases again, the same scenario. And price kept going up, and then it engineered this buy side liquidity, and it went all the way down seeking sell side liquidity. As you can see there, they seek for the sell side liquidity, and after that they just buy it. Why? Because the buy stocks resting above this previous day's highs. Price is going up, and the same thing keeps happening over and over again. Now this buy side liquidity got taken, and now you can see that price has engineered this beautiful sell stops there, and also this beautiful buy side liquidity. So where do you think price will go tomorrow in NFT? We don't know, but we know that we have sell side liquidity and we have buy side liquidity. So if they decide to run for the sell side liquidity, they might pick it up all the way to clear the buy side liquidity. And if they decide to run for the buy side liquidity, price might be allowed to run all the way for the sell side liquidity after the buy side liquidity is cleared. So that's how you can be able to use the liquidity in the market, and that's how you can use this to your advantage, knowing where price will most likely go to after clearing either one side of this liquidity pools. And one of the takeaways is that whenever you are bullish, look at this, how clear this is. You see that the lows are being protected while the highs are broken with ease. Price action finally is going up, and whenever it tries going down, it's rejected immediately. So this is beautiful price action. And whenever it's bearish, it does the same thing. You can see here bullish, and then it had nice bullish stairs going up, and then when it's bearish, it just swiped all these days in one day. and it can still just do the same thing as the bullish order flow does whenever it's bearish, as you can see them. The same thing can apply to bearish market conditions. Like here, look at the staircases going down. You see that the highs are being protected while the lows are broken with ease. Whenever the low is broken, price traces back inside previous day's range and then it sells. Whenever the low is broken, price traces back inside the previous day's range and then it sells. That's what it keeps doing over and over again. So that was the lesson on liquidity, knowing where the buy stops and the sell stops are. Remember, above previous day's highs and lows, there is a lot of liquidity that is being engineered each and every day and stored above those highs and lows of each and every day. So always make sure that you look out for these white spaces, because that is where the buy side liquidity and the sell side liquidity rest, and price is going to sit that. So study that and look into it to see how you can be able to grasp it and understand it and use it to your advantage. Thank you so much. I love you all. Have a great NFP day.